Welcome back, everyone. BBCA has long been regarded as a leading player in the banking sector, known for its strong fundamentals and strategic execution. As we review its performance for the fiscal year 2024, it's clear that the bank continues to demonstrate consistent growth, a robust funding structure, and resilient profitability, even in the face of economic fluctuations. Today, we'll take a closer look at the key drivers behind BBCA's sustained success. From its diverse and balanced portfolio to its prudent risk and capital management, the bank has built a solid foundation that supports both stability and future expansion. Let's begin by examining the highlights of BBCA's performance over the past year. Let's start with an executive overview of BBCA's performance over the period from 2018 to 2024. Over these years, the bank have witnessed significant compound annual growth in key areas such as loans, third-party funds, and total assets. This robust growth underlines BBCA's expanding market presence and its ability to scale operations effectively. The bank's loan portfolio is both diverse and balanced, with a strong emphasis on working capital and investments. This approach not only supports the operational needs of businesses, but also maintains a balanced risk profile. The bank's funding strategy is also a key strength. Thanks to a high CASA ratio driven by a dominant savings deposit mix, BBCA enjoys a stable and low-cost funding base. This is critical for sustaining growth over the long term. Even after the challenges of the pandemic, BBCA has demonstrated resilience through steady increases in net interest income and core net profit, as well as recovering net interest margins. This reflects the effectiveness of the bank's post-pandemic recovery measures. Lastly, the bank's prudent approach to risk and capital management is evident in its low and stable non-performing loans and a strong capital adequacy ratio. Coupled with attractive market valuation metrics, such as a favorable PE ratio and a stable PBV, these factors collectively position BBCA as a compelling investment opportunity. This overview sets the stage for the detailed analysis that follows. Now, let's delve deeper into the specifics of BBCA's performance. Let's begin with BBCA's loans and financing performance, detailed in this bar chart covering 2018 to 2024. The blue bars represent total net loans and financing, while the gray portions at the top show allowances for impairment losses. You can see steady growth in total net loans and financing, rising from 551 trillion rupiah in 2018 to 921.9 trillion rupiah in 2024, a compound annual growth rate of approximately 8.9%. Year on year, 2024 saw a robust increase of 13.8% compared to 2023, indicating strong lending activity. The allowances for impairment losses, shown in gray, have also grown but remain a small percentage of total loans, ranging from 2.5% in 2018 to 3.6% in 2024. This suggests prudent risk management as the bank maintains a buffer against potential defaults while expanding its loan portfolio. This growth in loans and controlled impairment levels are positive indicators of BBCA's ability to scale its core business while managing risk effectively. Next is the composition of BBCA's loans receivables from 2018 to 2024. This stacked bar chart breaks down the portfolio into working capital, investments, consumption, and other categories. Working capital loans, in dark blue, have consistently been the largest segment, making up 47 to 48% of total loans receivables, with the value growing from 255.3 trillion rupiah in 2018 to 405.5 trillion rupiah in 2024. Investments in light blue have also grown, reaching 35% of the portfolio by 2024, or 315.2 trillion rupiah. Consumption loans in gray and other categories in light gray remain smaller but stable portions at 18 to 21% and 1 to 3% respectively. This diversified loan portfolio, with a strong emphasis on working capital and investments, demonstrates BBCA's focus on supporting businesses and long-term growth while maintaining a balanced risk profile. The consistent growth across categories since 2018 is a testament to the bank's ability to cater to diverse customer needs. Now, let's examine BBCA's third-party funds, which include demand deposits, savings, and time deposits, as shown here for 2018 to 2024. The blue portions represent demand deposits, light blue for savings, and gray for time deposits. Total third-party funds have grown impressively, from 629.8 trillion rupiah in 2018 to 1,220.6 trillion rupiah in 2024, with a year-on-year increase of 2.9% in 2024. The percentages on the left side of each bar indicate the CASA ratio, the proportion of current accounts and savings accounts to total third-party funds. You'll notice the CASA ratio has ranged from 75% to 82% over the period, reflecting a strong and stable base of low-cost liquid deposits, which is a key strength for the bank. The composition of third-party funds shows savings consistently making up the largest portion, around 49 to 51%, while demand deposits and time deposits have grown but remain smaller, at 26.5 to 32% and 18 to 24% respectively of the total. This growth in third-party funds, particularly with a high CASA ratio, underscores BBCA's ability to attract and retain low-cost funding, which is crucial for maintaining liquidity and supporting its loan portfolio. The stability in deposit composition also reflects customer trust and BBCA's effective deposit gathering strategy. Moving on to income and profitability, this slide breaks down BBCA's net interest income, core net profit, and net interest margin from 2018 to 2024, offering insights into the bank's performance before and after the pandemic. The yellow bars represent net interest income, the blue bars indicate core net profit, and the gray line tracks the net interest margin as a percentage. Let's focus on the year-on-year changes for 2018 and 2024, as well as 2023 and 2024, to highlight the pre- and post-pandemic impacts on net interest income. Net interest income started at 45.3 trillion rupiah in 2018 and rose significantly to 82.3 trillion rupiah in 2024, achieving a compounded annual growth rate (CR) of 10.2% over this period. From 2023 to 2024, net interest income increased from 75.1 trillion rupiah to 82.3 trillion rupiah, marking a year-on-year growth of 9.5%. This sustained increase underscores BBCA's ability to bolster income even through economic disruptions, reflecting a strong recovery and resilience post-pandemic. Core net profit has demonstrated a robust upward trajectory, beginning at 27.1 trillion rupiah in FY20, a post-pandemic low, and climbing to 54.8 trillion rupiah in 2024, with a notable year-on-year gain of 12.7% from 2023, 48.6 trillion rupiah to 2024. This consistent improvement highlights BBCA's capacity to enhance profitability, overcoming pandemic-related challenges, and capitalizing on economic recovery. The net interest margin, shown by the gray line, stood at 6.1% in 2018 before the pandemic, but dipped to 5.1% in FY21 amid economic pressures. By 2024, it had steadily improved to 5.8%, a year-on-year increase of 5.5% from 5.5% in 2023. This gradual recovery signals a rebound in margins following the pandemic, bolstered by the bank's strong CASA ratio, and reflects BBCA's ability to navigate post-pandemic conditions effectively. Overall, this slide illustrates BBCA's ability to achieve sustained growth in income and profitability, particularly post-pandemic, with significant year-on-year improvements from 2023 to 2024, demonstrating the bank's resilience and recovery from earlier economic challenges. Now, let's turn to BBCA's balance sheet strength and risk metrics, as shown on this slide, covering 2018 to 2024. This slide provides insights into total assets, gross non-performing loans, NPL, loan-to-deposit ratio, LDR, and capital adequacy ratio, CAR, offering a clear picture of the bank's financial stability. The blue bars represent total assets, the yellow bars indicate gross NPL, the blue bars on the right show the LDR, and the green line represents the CAR. Let's focus on the year-on-year changes for 2018 and 2024, as well as 2023 and 2024. Total assets have grown substantially, starting at 824.8 trillion rupiah in 2018 and reaching 1,449 trillion rupiah in 2024, a compounded annual growth rate, CAGR, of 9.8% over this period. From 2023 to 2024, total assets increased from 1,408.1 trillion rupiah to 1,449.3 trillion rupiah, marking a year-on-year growth of 2.9%. This sustained expansion reflects BBCA's ability to scale its operations effectively. Gross NPL, shown in yellow, has remained low and stable, starting at 1.4% in 2018 and decreasing slightly to 1.8% in 2024. From 2023 to 2024, it held steady at 1.8%, indicating robust asset quality and effective credit risk management, even through the challenges of the pandemic. This consistency underscores BBCA's prudent lending practices and resilience. The loan-to-deposit ratio, shown in blue on the right, started at 81.6% in 2018 and increased to 78.4% in 2024, reflecting a balanced approach to lending and deposit funding, though with a slight decline over time. From 2023 to 2024, it rose from 70.2% to 78.4%, indicating BBCA's conservative and stable funding strategy as it expanded its loan portfolio. The capital adequacy ratio, shown by the green line, began at 23.4% in 2018 and increased to 29.4% in 2024, remaining well above regulatory requirements. From 2023 to 2024, it remained stable at 29.4%, demonstrating a strong buffer against financial risks. This robust capital position highlights BBCA's financial stability. Overall, this slide illustrates BBCA's strong balance sheet and low-risk profile, with significant growth in assets, stable NPLs, a balanced LDR, and a solid CAR, showcasing the bank's financial resilience. Building on BBCA's solid financial foundation, let's now explore its market valuation, as detailed on the next slide. This chart tracks the price-to-earnings ratio and price-to-book value from 2018 to 2024, with an update as of February 21, 2025, providing insight into how the market values BBCA's performance and stability. Starting with the PE ratio, shown by the blue line, you'll see it peaked at 30.8 in 2020, but has since declined steadily to 21.7 by 2024. This downward trend suggests the stock has become relatively more affordable over time, potentially reflecting shifts in market sentiment, earnings growth expectations, or broader economic conditions. As of February 21, 2025, BBCA is trading at a PE ratio of 20.2 times based on a last price of 9,000 rupiah per share, indicating it remains attractively valued compared to its historical highs. Turning to the PBV, represented by the orange line, it's remained remarkably stable, ranging between 4.2 and 4.5 from 2018 to 2024, and currently stands at 4.2 times as of February 21, 2025. This consistency suggests BBCA's market value relative to its book value has been steady, reflecting confidence in its underlying asset base and financial health. Based on recent market data, BBCA's market capitalization as of February 2025 is approximately 67.44 cents a billion US dollar, positioning it as one of the more valuable companies globally, ranked 299th by market cap according to companiesmarketcap.com. This valuation, combined with the current PE ratio and PBV, indicates BBCA is trading at a premium compared to some industry peers, but remains within a reasonable range for a leading Indonesian bank, especially given its strong financial performance and stability, as we just discussed. Overall, this slide highlights BBCA's attractive valuation metrics, with a lower PE ratio than its peak and a stable PBV, suggesting the stock offers good value for investors as of late February 2025, particularly in the context of its robust market position and growth trajectory. In conclusion, BBCA's performance from 2018 to 2024 clearly reflects a well-rounded and robust growth strategy. First, we see strong growth in total net loans, third-party funds, and total assets. This consistent expansion signals not only an effective scaling of operations, but also a readiness to capture future opportunities. Risk management remains a cornerstone of BBCA's strategy. The controlled allowances for impairment and stable non-performing loan ratios illustrate a disciplined and prudent approach to credit, ensuring the bank's resilience even during challenging times. Profitability has also been a standout theme. Despite the challenges posed by the pandemic, BBCA has steadily increased its net interest income and core net profit, supported by a gradual recovery in net interest margins. These improvements are a testament to the bank's operational efficiency and effective post-pandemic recovery strategy. Finally, the market has rewarded this performance. A declining price-to-earnings ratio, in tandem with a stable price-to-book value, and a robust market capitalization underscores that BBCA is not only financially sound, but also attractively valued compared to its peers. To sum up, BBCA demonstrates a balanced approach to growth, risk management, and profitability, positioning it as a leading and resilient financial institution. Thank you for your attention, and if you have any questions regarding BBCA, please write them in the comments section.